Let's take one more case study on capital structuring. You have X Limited, a profit-making company, has a paid-up capital of 100 lakhs consisting of 10 lakhs ordinary equity shares of rupees 10 each. Okay, so the capital is 100 lakh and you have 10 lakh shares and the worth of one share is 10. So 10 lakh into 10, you have 100. Currently, it is earning an annual pre-tax profit of 60 lakhs. The company shares are listed and are quoted in the range of 50 to 80. The management wants to diversify production and has approved a project which will cost rupees 50 lakhs and which is expected to yield a pre-tax income of 40 lakhs per annum. Okay, so the company is actually going for a project. The cost of the project is 50 lakh, and if they take up this project, every year they'll get pre-tax income of 40 lakhs per annum. Question continues. To raise this additional capital, following options are under consideration. Number one, to issue the equity share capital for the entire additional amount. What was the additional amount? 50 lakhs. So they are going to issue equity capital for entire additional amount. It is expected that new shares face value of rupees 10 can be sold at a premium of 15. It means you will get 25 per share. And what is the capital required? 50 lakhs. 50 lakhs divided by 25 will tell you how many shares can be issued. And what is the already existing shares? How many shares they have already? Already I think they have 10 lakh shares. So 50 lakhs divided by 25, say 2 lakhs. So 10 lakh plus 2 lakh, the company will have a revised number of shares as 12 lakhs. Okay. Now that 12 lakhs got to be distributed between equity shareholders in the form of EPS, and that information will help you when you want to calculate EPS. Okay. That's your option 1. Then we'll discuss option 2. They are going to issue 16% non-convertible debentures of rupees 100 for the entire amount. So that entire 50 lakh is going to be raised in the form of a non-convertible debenture. When they raise non-convertible debenture, they have to pay interest. So please don't forget it. Okay. And the third option is they are going to go for hybrid. They will issue equity share capital of 25 lakh and 16% non-convertible debenture for the balance amount. So 25 lakhs and the balance amount 25 lakh, they are going for debenture. In this case, the company can issue shares at a premium of 40 each. What is the face value? 10. What is the premium? 40. So they are going to issue for 10 plus 40, that is 50. 25 lakh is the capital that is raised. Value per share is 50. So if you divide, you will know what is the number of shares, and that information will use in EPS. You are required to advise the management as to how the additional capital can be raised, keeping in mind the management wants to maximize the EPS, earnings per share, to maintain its goodwill. The company is paying income tax at 50%. Okay. Using all this information, now let us analyze and we'll select a capital structure where EPS is going to be maximum. So let me summarize that what we have. What is the cost of the project? Cost of the project. Let me make a small change in my pen settings. Excuse me. Yeah. So I'll select pointed one. Okay, fine. So what is my cost of the project? My cost of project works out to 50 lakhs. Now this company basically has three options. Option 1, it can go for equity. So it is a full equity option. The entire 50 lakh will come from equity. Option 2, they can go for 16% debentures. That is, entire 50 lakh will come from debenture. And the third option is they can go for hybrid. Hybrid in the sense something will come, that is 25 lakh will come from equity. Remaining 25 lakh will come from debenture. Okay. Now what we should know is what will be the number of equity shares in this option. We'll call it as option 1, option 2, option 3, because only when you know the number of equity shares that got to be issued and already existing number of shares, you will be able to calculate what is EPS. Okay. So before even getting into the earnings calculation, let us try to find out what is the number of equity shares. Okay. Now, if the company goes for option 1, at what value they'll be able to issue the equity shares? What is the information we have? 10 rupees share can be issued at a premium of 15. It means you can issue it for 25 rupees. Okay. So I'll capture that here. The capital required is 50 lakh and value of share. What is going to be the value of share? It is 25. So what is the number of shares? How many shares to be issued? Number of shares is nothing but 50 lakhs divided by 25. So how many shares? 2 lakh shares got to be issued. Okay. So this is the scenario if you are going for option 1, full equity. And if you are going for option 2, debenture, no fresh equity shares. Okay. No fresh equity shares. And if you are going for option 3, it is basically a hybrid option where 50% will come from equity, 50% will come from debenture. And when you go for equity, what is happening is 10 rupees worth share is sold at a premium of 40. It means you will get 50. Okay. So what is the number of shares? Number of shares is nothing but 25 lakhs divided by 50. Okay. So 25 lakhs divided by 50. Let me see how many shares we have. That is, if you go for third option, the number of shares is 25 lakh divided by 50. It means 50,000 shares have to be issued. So if you go for the third option, additional 50,000 shares have to be issued. So now what we'll do, we'll try to summarize, that is, what will be the number of shares if you go for option 1, 2, 3. Okay. So let me have that. I'll call it as working note 1. Working note 1. Number of equity shares, and we know plan 1, plan 2, plan 3. So in all the 3 plans, there are certain number of shares which is already there in the picture. Okay. Existing number of shares, and that information we have in the question. Existing number of shares are 10 lakhs. In all 3 cases, existing number of shares are 10 lakhs. So I'll put that it is 10 lakhs and 10 lakhs. Okay. In all 3 cases, it is 10 lakhs. Then new shares have been issued. Item B, add new shares. So what are the new shares? If you take plan 1, just now we have calculated new shares to be issued in plan 1 is 2 lakhs. Okay. So it is 2 lakhs. If you take plan B, it is a full debt option, so no new shares. But if you take plan 3, new shares have to be issued. It's basically 50,000 shares. Okay. So let me capture that. It is 50,000. So now we have complete picture of number of shares. Okay. So let me total this. It is total number of shares. Total number of shares is nothing but A plus B, and here it is 12 lakhs. Here it is only 10 lakhs, and in the third case it is 10 lakh plus 50,000. So it is 10 lakh 50,000. Okay. So this information is very relevant, because if you want to calculate EPS, you cannot calculate EPS without knowing what is the number of shares. Okay. So this information is relevant for us. So now we have the total number of shares. Now what we'll do, we'll try to find out what is the earnings available for shareholders in all the 3 plans. Okay. So working note 2, computation of PAT for plan 1. Okay. Now, when this company goes for this project, it is actually going to earn additional return or additional income, put it rightly. Let me go back to the question. Question says, X Limited, a profit-making company, something about capital structure. And here it is mentioned that currently it is earning an annual pre-tax profit of 60 lakhs. And if they go for this project, they will get a pre-tax income of 40 lakhs. So already they have 60 lakhs. Now if they go, they'll get 40 lakhs. Okay. So let's capture that. What is their existing profit? Their existing pre-tax profit. It is existing pre-tax profit. How much is that? It is 60 lakhs. And what will be their new profit? New pre-tax profit. If they go for this new project, they will get another 40 lakhs. So what is going to be the total? Total profit before tax. That's nothing but item number A plus B. It's going to be 1 crore. Okay. Now on this 1 crore, they have to pay tax. And what is the tax rate we have? We have tax rate at 50%. Okay. So from this, let us deduct tax at 50% less tax at 50%. So 50 lakh got to be paid. So what is remaining with them? 50 lakhs. So this 50 lakhs is nothing but the profit after tax, and this is the earnings available for the shareholders. Okay. So profit after tax is 50 lakhs, and from this 50 lakhs, if you can divide the number of equity shares, you will get EPS. Okay. So what I'll do, I'll divide the number of equity shares. Number of equity shares. And just now we have calculated, I'll pick up how many equity shares? 12 lakhs. Okay. So let's go back. The number of equity shares are 12 lakhs. So 50 lakhs divided by 12 lakhs, and what is the EPS? If I calculate, it works out to 4.17. So item number G, earnings per share. Earnings per share, that is nothing but item number E divided by item number F. So I'll write it as E divided by F, and it works out to 4.17 per share. So what is the understanding is, if you go for this plan, that is plan 1, which is full equity, okay, it is full of equity, EPS is going to be 4.17. Now we'll evaluate plan 2. What is plan 2? Plan 2 is full of debt, right? What's the working note number? It is working note 3. Working note 3. That is, you have to evaluate, or you have to basically find out the profit after tax of plan 3, and for that you should know what is your existing profit. Okay, you know your existing pre-tax profit is 60 lakh and your new pre-tax profit will be 40 lakh, but it is only from this profit you have to pay off the interest, right? So what is the interest rate? I think we have interest rate as 60%. So what I will do for just simplicity, let me just copy these items so I can make best use of them. Yeah, I'll put them here. So I have my existing pre-tax profit 60 lakh, new pre-tax profit 40 lakh. So this is going to be my, say, item C, profit before interest and taxes. How much? It's going to be 1 crore. Okay, it's going to be 1 crore. Now from this 1 crore, what I have to do, I have to deduct my interest. And what is my loan amount? I'm going to raise entire 50 lakhs in the form of equity, and on that I have to pay interest at 16%. Okay, so I'll show you the calculation here. Interest, that is, what is the loan amount? Loan is not the loan, that is basically the debenture. Okay, debenture, it is 50 lakhs. And what is the interest rate? Interest is 16%. So 50 lakh into 16%, it works out to, let's say, 8 lakhs. So the interest amount is nothing but 8 lakhs. So this 8 lakhs got to be subtracted here. Okay, so let me do that. Item D, less interest, and it works out to 8 lakhs. Okay, so interest works out to 8 lakhs. My profit before payment of interest and tax is 1 crore. So what is going to be my profit after tax? Item E, profit after tax. That's nothing but item number C minus D. C minus D, and it is going to be 92 lakhs. Now from this 92 lakh, I have to pay tax at 50%, less tax at 50%. So it is 92 lakh into 50%, it is 46 lakhs. So what is my earnings after tax? My profit after tax, I think there is one technical mistake. Please note here I have mentioned or use the term profit after tax. This is not profit after tax. This is profit after interest. So the right usage here would be profit before tax. Kindly excuse me for that. It is profit before tax. So now only here we can have profit after tax. Okay. So what is my profit after tax? It is going to be the same amount, 46 lakh. Now from this, can I find my EPS? Yes, I can find my EPS. For that, I should divide it by the number of shares. Let me just change the reading view. Okay. I'll increase the size. Yeah. So here what I'll do, I'll divide it by the number of shares. Number of equity shares. See, when you go for a debt option, actually you are not raising any equity. So already they have 10 lakh shares and the 10 lakh will continue, right? So number of equity shares are 10 lakh. So what's going to be the EPS? EPS is nothing but item number G divided by H. So it is 46 lakh divided by 10 lakh. So it is going to be 4.60. So if the company goes for option 2, their EPS is going to be 4.6, but still now we cannot take a decision before analyzing the third option. Okay. So what we'll do now, we'll analyze the third option. Let me open a fresh page. I'll open a fresh page and it should be working note number 4. Okay. So I'll have working note 4. Working note 4. That is, I have to find out the profit after tax in plan 3. And if I go for plan 3, I should know what is my profit. Okay. Let me paste that profit. I think I've calculated somewhere. Yeah. So this is my existing pre-tax profit 60 lakh, new pre-tax profit of 40 lakhs. So my profit before interest. Okay. My profit before interest, how much is it? It is 1 crore. Now from this I have to pay interest, less interest, and I'll have a small calculation for interest. Interest, what was the cost of the project? It was 50 lakh, but only 25 lakh is coming from debt. So interest is nothing but 25 lakh into 16%. So it is going to be 4 lakhs. Okay. Let me cross check. Is it 4 lakhs? Yeah, it is 4 lakhs. So interest is 4 lakhs. Let us subtract that. So what we have here is 96 lakh, and let me use the term correctly. It is profit before tax. Okay. It is profit before tax. It is going to be 96 lakh. Okay, it is profit before tax. It is 96 lakh, and 96 lakh if I divide or if I pay tax on it, less tax at 50%, it is going to be, let's say, 48 lakh. Okay, it is going to be 48 lakh. On 96, if I pay tax, it is going to be 48. And what is going to be my profit after tax? That will also be the same figure. Profit after tax, that will also be same, 48 lakhs. Okay. Now I have to divide this by number of shares so that I can find EPS. What I'll do, I'll try to reduce the size of this so I can do the calculation here itself. Yeah. Let me reduce the size. So now I know my profit after tax is 48 lakh. Now from this 48 lakh, I have to divide the number of shares. Item H, Item H, number of equity shares. And we know that already they have 10 lakh plus they have to issue 50,000 shares, and we have already calculated in working note 1 the number of shares is going to be 10 lakh 50,000. Okay, so 48 divided by 10 lakh 50,000. 48 lakh divided by 10 lakh 50,000, and it would work out to 4.57. So this is going to be the EPS. EPS will be item number G divided by H. EPS is going to be item number G divided by H. It is 4.57. So now understand, you have 3 EPS and we have to take a decision. Okay, so let me capture the EPS in all the 3 scenarios. EPS, if you take plan 1, let me tell you what was the EPS in plan 1. It was 4.17. If you take EPS in plan 2, it is 4.60, and if you take EPS in plan 3, what we have calculated now, it is 4.57. So now you have to tell, or you have to decide which combination is going to work in favor of the equity shareholders. It is actually the combination 2. What is this combination 2? Combination 2 is going for 16% debenture. Because when you go for 16% debenture, what happens is the EPS is at its highest. So you can conclude saying that this company should go for plan 2, that is they should raise 16% debenture for 50 lakh for financing the project so that EPS is at its maximum.